A small architecture firm designs a building. The drawings get approved, construction starts, and partway through the job, the contractor hits a problem. A detail that should have been in the plans isn't there. Now part of what's already built has to come out and get redone, and that rework costs real money. The owner looks at the bill, points at the firm, and says, "Your mistake caused this." Now there's a demand letter, an attorney, and a number with a lot of zeros in it. Here's the thing. That firm is going to be okay because they carried professional liability insurance. They knew it was the coverage that answers for a claim like this, and they had it in place. I want to walk you through their story, not because they did something wrong, but because they did it right. It's the cleanest way to show you what general liability usually does with a claim like this, which is typically nothing. It steps back and says, this isn't the kind of claim I was built for. Professional liability is the policy that responds. If you don't know who I am, my name's Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. We place professional liability coverage for all kinds of service businesses. That story is a composite, the kind of claim that happens in this line of work, not one specific project. But a lot of business owners don't realize their general liability usually isn't built for a claim like that. Here's the first thing that confuses people, and it's worth clearing up early. Professional liability insurance goes by more than one name, and which name you hear mostly depends on what business you're in. When we talk to a real estate agent, an insurance agent, a consultant, or someone in IT, they tend to call it errors and omissions, or E&O. When we talk to a doctor, a psychologist, or a law firm, they call it malpractice. When we talk to an architect, an engineer, or a CPA firm, it's professional liability. The details change a lot from one profession to the next, but they all cover the same basic family of risk. Someone says your professional work, your judgment, or your service caused them harm. So if you've been comparing options and you keep seeing professional liability in one place and errors and omissions in another, you're usually not looking at two different products. You're looking at the same kind of coverage wearing a different name tag. And it can get more confusing than that because the label can change for the same profession depending on where you are. The exact same coverage for a real estate agent might be called errors and omissions in one state and professional liability in another. The name often follows local convention. The protection underneath is usually aimed at the same basic risk. Now here's where you do have to pay attention because the names aren't always purely cosmetic. In some industries, the label signals what's bundled in. Technology E&O is a good example. For a software developer or an IT firm, a tech E&O policy often folds in things a plain professional liability policy wouldn't, like certain cyber and data exposures or media and content claims. Same core idea, but the specialty version reaches further. The lesson isn't to memorize the names, it's to read what the policy actually covers, not the word on the front of it. That matters in a real way. When a client or a contract asks you for E&O and your policy says professional liability, people get nervous. A deal stalls while a lawyer asks for confirmation. Understanding that they're describing the same coverage and knowing how to confirm it saves you that headache. To understand professional liability, you have to understand what it isn't. General liability is the policy most business owners think of first. Its main job is bodily injury and property damage, and it can reach some other things too, like personal and advertising injury. But for this conversation, the line that matters is physical injury or damage on one side, professional financial loss on the other. If a client trips over a loose rug in your office and breaks a wrist, that's general liability. It's the physical stuff. Someone got hurt or something got broken, and the policy steps in to handle the injury or the damage. That's important coverage, and most service businesses carry it, but notice what it responds to: a physical event, a body, a building, a piece of property. It has nothing to say about the quality of your work or whether your advice was right. Let's go back to our architecture firm. If a client came to the office for a meeting, tripped on the stairs and got hurt, general liability would be in play. But that's not what happened. Nobody is claiming a slip and fall injury or an accident where a firm broke a client's property. The heart of the claim is that the firm's professional work, a detail left out of the drawings, caused the owner a financial loss. General liability looks at a claim and says, this isn't bodily injury and it isn't the kind of property damage I cover, so it's not my problem. That's not a flaw in the policy. It just isn't what general liability is for, which is exactly why the firm carried a second kind of coverage for the other kind of risk. Professional liability picks up exactly where general liability stops. It covers financial harm caused by your professional services, your advice, or your work. A mistake, an oversight, a missed deadline, a piece of bad guidance. Something you failed to do that you should have. When a client says your expertise cost them money, this is the coverage that responds. For the architecture firm, the missing detail in the drawings is the textbook example. The owner isn't claiming a physical injury. They're claiming the firm's work product, the design they were paid to get right, left them with a financial loss when the building had to be partly torn out and redone. That's a professional services claim, and professional liability is built for it. And here's the part that surprises people. You don't have to actually be wrong to get hit with one of these. A client unhappy with the outcome can file a claim even when you did everything right. Now, here's something a lot of business owners don't understand about these policies, and it's the part that can really hurt you. Most professional liability coverage is written on a claims-made basis, and many policies go a step further as claims made and reported, which means when you report the claim matters too. With most general liability, what matters is when the incident happened. With claims-made coverage, what matters is when the claim gets filed. The policy has to be active at the moment the claim comes in, not just at the moment you did the work. Think about what that means for the architecture firm. They finished the design work this year, but a problem in the drawings might not surface until the building is well into construction, and a claim might not get filed until next year or the year after. These mistakes can sit quietly for a long time. So picture the firm a few years down the road, the partners retire and close the practice, and they stop the policy because they're not designing buildings anymore. Then a claim shows up on a project they finished years ago. The work was done while they were covered, but the coverage is gone by the time the claim arrives. That's the trap, and it catches firms that carried coverage faithfully the entire time they were working. This is why continuity matters so much with this coverage. When you switch carriers, you want to protect the date you first started being covered, which is your retroactive date. That date tells a policy how far back it's willing to look, and losing it can leave years of past work outside of your coverage. And when you stop carrying the policy entirely, there's an option called tail coverage, also called an extended reporting period, that gives you more time to report claims after the policy ends, as long as the work traces back to a period your policy agrees to cover. If you're getting in or out of one of these policies, that's a conversation to have with your agent before you make the move. A big part of the value of professional liability isn't the settlement, it's the defense. When a client sues over your professional work, you need a lawyer whether the claim has merit or not. You can be completely in the right, do everything by the book, and still get dragged into a dispute that costs real money to fight. Legal defense on a professional claim runs into tens of thousands of dollars fast. And that's before anyone decides who's actually at fault. Professional liability is designed to cover that defense. For a lot of policies, the coverage responds even when the claim turns out to be groundless. That's the whole point. The protection isn't just for the times you made a mistake. It's for the times a client believes you did and decides to do something about it. One detail to check is whether defense costs are inside or outside of your limit. On a lot of professional liability policies, defense is paid inside the limit, which means the lawyer bills reduce the amount of insurance left to pay a settlement. That matters because a $1 million policy may not leave a full $1 million available if a big chunk of the limit has already gone to defense. It's worth asking your agent which way your policy is written. For our architecture firm, this is what stands between them and writing a check to a defense attorney out of their own pocket while they wait to find out whether they did anything wrong at all. So, who should be thinking about professional liability? The simple answer is, if your business is built on your expertise, your advice, or a service you perform, you're a candidate. We place this coverage for psychologists, real estate agents, law firms, CPA firms, architects, insurance agencies, and plenty of others. Anyone whose work product is their judgment and their service rather than a physical good has this exposure. There's also the contract side of this, and in a lot of industries, you don't get to decide on your own whether you want this coverage. A real estate brokerage may require its agents to carry E&O. A larger client may require professional liability in writing before they'll sign. A lender, a franchise, or a licensing body might ask for it too. At that point, the coverage stops being optional. We see business owners run into this. They've landed the client, the contract's ready to sign, and then a requirement they didn't expect shows up in the paperwork, and they're scrambling to get a policy in place so the deal doesn't slip. And this can be where that naming thing comes back around. The contract asks for one term, your policy uses another, and now you're trying to prove they're the same thing while a deal sits waiting. Having an agent who can speak to both sides of that, who can look at what the contract actually requires and get you proof of coverage quickly, is worth a lot in those moments. So here's the bottom line. General liability covers the physical. Somebody got hurt, something got broken. Professional liability covers the financial harm that comes from your work, your advice, and your professional judgment. They're two different policies solving two different problems, and a lot of service businesses need both GL and professional liability. If you provide a professional service and you're not sure whether you've got this gap covered, or you've been asked for E&O and you're not even sure what you have, that's exactly the kind of thing we sort out every day. There's a link below to get a quote or just start the conversation. And if you found this useful, subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.